Hey everybody, Gary with Basecamp Trading. Let's take a look at how we were trading the ES this afternoon. You can see that the ES this morning, this was our opening bar for the New York Open, and you see that opened right at the top and made a big push down, big strong push down off of news. And then you left this bottoming tail. You hit significantly undervalued. You went deep into significantly undervalued, left this big bottoming tail, opened right here. The next bar opened right here, a little push down, and then the entire body of this bar was all buying back the other way. And it was followed up by another fairly bullish bar, left the bottoming tail, and again the body was all buying, pushed up. And then we had the reversal doji. This bar opened right here, pushed up, left the topping tail. The entire body of the bar was all selling, and then it's followed up by a bearish bar. Topping tail, the entire body of that bar was all selling. This bar opened right here, pushed down, and then left the bottoming tail, and the entire body of that bar was all buying. So that was actually a pretty bullish bar back the other way. But then it was followed up by another pretty bearish bar. The bar opened right here, left the topping tail, and the entire body of that bar was all selling. And then we had the transition. This was our high-low reversal bar. The low of this bar was lower than the previous bar, left the bottoming tail, and the entire body of that bar was all buying. Strong close above your resistance, the 5 and 13, and above the previous high of on this bar, or the high of the previous bar, which was this one right here. At the same time, you also triggered in what we call a one red finger, which is a very bullish momentum pattern. You can see we had this one red histogram, green on this side, one red one, green on this side. This is a very bullish momentum pattern. So we triggered in the one red finger. We had the high-low reversal bar. At this point, the long side of the ES is the only side you should be trading on. If you're trying to trade the short side, you probably weren't doing all that great. And the whole rest of the afternoon, the ES just continued to push higher, ran up here to the 50 EMA, pulled back off of that a couple times because, again, we know the 50 EMA is significant support and resistance. But this ended up being a pretty bullish bar. It opened right here, pushed down a little bit, left the bottoming tail, ran into the 50 several times. We popped above it, below it, and then got a nice strong close. The entire body of this bar was all buying at the top right here. So that was a nice strong close. Left the bottoming tail, the entire body was buying. Strong close above a significant resistance zone, followed up by yet another really bullish bar. This bar opened right here. The entire body of this bar was all buying. We ran right up to the 200 EMA. Again, we know the 50 and the 200 EMAs are significant support and resistance. We hit significantly overvalued on our 30-minute chart. At the same time, we were hitting the 200 EMA. So again, we know this is a good place to take profits, or at the very least tighten your stops up. And especially if you're significantly overvalued at the 200 EMA, that's definitely a red flag, definitely a time to take profits. If on this pullback you left a bunch of money on the table, that's your own fault at that point, because again, we know that very, very, very often the 50 and the 200 are going to be significant support and resistance. And if you're significantly overvalued at a significant resistance point, again, that's a huge red flag to tighten up your stops and consider taking profits. Again, if on that pullback you left a bunch of money on the table, that's bad trade management, because we had some really good signals telling us to get out right there. That price action led to some pretty nice afternoon setups on our Renko chart. Right in here is where we were putting in that low high reversal. We set up the wick off the 18. This is our large bar chart. Set up our wick off the 18, triggered in 53 and a quarter. The high there was 63 and a quarter. So 10 points in the ES. You had the potential to grab $400 or $500 per contract there. Just, depends on how you managing your trade. Had a little bit of a pullback right here. Set up the fast line zero touch. The fast line is the fast line on MQ momentum. Pulled back to the zero line. The zero line is the line that the histograms move above and below. So we had our slow line zero touch, which gives us plenty of room for momentum to accelerate our trade in the direction we want it to go. We had triggered in that one red finger, which was a very bullish momentum pattern on the 30-minute chart. Set up the slow line zero touch off the 34, wick off the 34 trade. Entry would have been 38.56 and a quarter. That ran as high as 38.82 and three quarters. So you had the potential to grab 26 full ES points or $1,300 per contract. And if you didn't catch it all, you still should have grabbed at least $1,000 on that move, probably a little more. But again, at least $1,000 on that move. Set up the wick off the 18 right here. Triggered in at 38.80 and a quarter. Your high was actually 38.92 and a quarter, but we had the 200 up there at 38.91 and a half. So we know that for sure would have been a good place to definitely consider taking profits. That would have been good for 11 ES points or $550 per contract. So some nice bullish price action off your 30-minute chart, giving us some nice Renko setups, which definitely gave us potential for some nice trades. Now, again, nobody's hitting every top and every bottom, whether you're maximizing every single trade or not. Probably not, but that's okay. Still, you would have locked in at least 200 on that because that's our first two targets. So we're definitely looking to lock in there. You definitely should have locked in $1,000. Yeah, it went higher. It went as high as 1,300, but you get $1,000 on a trade. You need to lock that in. I mean, anytime you can catch $1,000 on one trade, that's a nice trade, and you want to make sure you lock that in. So again, could have hit as high as 1,300. Should have locked in at least 1,000. Same thing here. Could have hit a little more than 500, but again, should have locked in that 500. That 200 EMA was there. We knew it was there. We were significantly overvalued on the 30-minute chart. We were bearish divergence on the Renko chart. I mean, everything telling you should have been tightening stops or taking profit right there. So good potential there. We also had a nice 5-minute setup. As we don't trade only Renko charts, Renkos are the main charts we trade, but we keep time charts up in the room as well. And we had set up a pretty nice reversal doji right here. You can see that the 5-minute chart had been in a downtrend, lower high, lower low, lower high, lower low, lower high, lower low. And then we changed. We reversed right here. And this is when that high-low reversal was taking place on the 30-minute chart. And we broke above the previous pivot high. So now we had a higher high followed up with a higher low, another higher high, and another higher low. And right here, we were setting up this 5-minute reversal doji right here. This also was a wick trade on the Renko chart, but this was a 5-minute reversal doji. And we were talking about this setup in the room as it was occurring. Your entry on that 5-minute reversal doji was a break above 38.56. So you have been in around 38.56 and a quarter, and then you just trail single bars by a few ticks, a few ticks under each bar, but that would have taken you all the way into that 200 EMA. And again, we know that is a very good place to consider taking profits and tighten our stops. So that was a really nice trade off of a 5-minute reversal doji. That would have been good for potentially 35 full ES points or $1,750 per contract. You should have been locking in, a significant amount on that. You, at the very least, on that particular move right there, you really should have locked in at least $1,700 because, again, we know that 200 EMA up there is a good place to take profits, and we were trailing stops, so you never got stopped out on the entire move up. And once we hit that 200 up there, we know that's a very, very good place to tighten stops, or at the very least take profits, or take profits, at the very least tighten stops. So again, you should have had a strong opportunity to grab $1,700 per contract on that move up. Everybody trades different, but that, again, it was an obvious target and an obvious place to take profits. So really no reason to leave a bunch of money on the table on a pullback like that, because we were significantly overvalued on the 30-minute chart. We had bearish divergence on the Renko chart, and we were at a significant resistance area. So again, potential to grab $1,700 per contract on that move there off of the 5-minute reversal doji. So again, plenty of opportunities in the ES today, um, based off of that high-low reversal bar from the 30-minute chart, which was right there. We had that low-high reversal. I think you called it high-low, but it was a low-high reversal right there.